the thing is that people are so fixated on this image where it's like if you drive a certain car, they think you're successful, right? But they don't know that that car might be a lease, that car might be a rental. Oh, they turned $100 into $1 million.
Yeah.
It's possible, yes, in that area, but just because you do it doesn't mean the next person is going to be able to replicate it. If you have all these materials things, you're not really planning for the future, right?
Yeah.
Because what happens if, we have another pandemic and you lose your job, you lose your income? What happens if, your house burns down? Hedge funds literally pay millions of dollars a year to get information before everyone. It just blows my mind where people can wholeheartedly sit there with a serious face and adamantly XRP could never go to 100. Now they have $1,000 to $10,000 valuation on XRP.
All right, what's up, guys? Welcome to the Friendly Bear Podcast. Today I have a interview session with Rig. Rig is a professional trader that I've met all over the world when I go travel. We've met in Argentina, in Spain, and Rig, he knows a lot of the people that I know and that travel all over the world and are excellent traders. And he frequents places that I like to frequent myself. Especially him, he frequents Dubai and Colombia, South America, all over the world, speaks multiple languages, is a really fascinating guy. So here he is. I invited him on the Friendly Bear Podcast for an interview, and he flew into LA, and I'm showing him around LA, and now we're doing the podcast. So Rig he's a trader. He's a 7-figure trader, or maybe more, I don't know, but seven. And he's a futures and commodities trader, but he's just a financial markets trader. He trades all types of things, and we're going to talk about that, and we're going to talk about many other things. So with that, welcome Rig to LA, and welcome to the U.S. Bank Tower. You saw the amazing views. Yes, what's your first impression of LA first off?
At first, first of all, thank you for the invitation. It's a pleasure to be here with you. My first impression of LA at first was it gave me Seattle vibes, right? Certain areas was reminding me of when I was in Seattle. But overall, I like the vibe downtown. I've heard some mixed reviews. Some people call it the hood, but it doesn't look like a hood to me. Great food so far around, and you've showed me some pretty amazing structures, and this building is just amazing. The views, the aesthetic, I could probably spend days here at a time.
Yeah, so we went to the City Club, which is my club across the street, for breakfast. It's like a late breakfast here in the West Coast, so it's nice. Did you trade early? I know you trade all types of markets, but for me, it's okay, I trade 6 in the morning or so, all the way to 1 p.m. And then 11 a.m. I can, 10:30 or so, go over there and then come right back. And yeah, you were telling me, so the U.S. Bank Tower was, yeah, you're right. I never thought about that. Independence Day, the movie, where the aliens,
when it first came into the scene, and they all moved strategically. This tower was a tower that it was above, that it shot the beam that just destroyed everything, and it went for miles.
Yeah.
Check it out. Yeah,
Yeah.
the first Independence.
Also, it's been on with GTA, the game. It's called Maze Bank. And it's been, it's a super famous building. So it's we went to the 54th floor, saw the views, and it's funny. Yeah, it's incredible. And yeah, you saw Disney Concert Hall, beautiful building over there, and some other stuff. So Rig, so first of all, let's go into a background of how you got into trading, because you have a long history, So you've been around longer than me, by a few years, probably by 5 years or so. You've been trading for a while. Yeah. What was your journey through the markets, and what got you to what you like to trade now, which is I'm assuming commodities and futures for the most part.
So, what got me into trading was actually a motorcycle accident. So, if you look at me, I have some scarring on my left side, chin, eye. And in 2012, I was in a motorcycle accident, and I was not able to do manual labor anymore. Broken clavicle, literally probably almost died from that accident. And I needed to find a way to make an income without doing physical labor. And I started personal training. So I was training people how to sculpt their bodies to whatever image that they have or that they wanted. And from there, I came across a gentleman that was asking me a bunch of fitness questions. And in turn, I started asking him questions. And then, you start looking at their page, seeing what they're about. And I saw that he was on like a CNN or like a money show. So yeah, so he was asking me a bunch of questions. I started asking him a bunch of questions. And then I saw that he was on a money show, and he's like, oh, he's a day trader and he teaches people how to trade. And full disclosure, this was Tim Sykes.
He was at your gym?
Huh? No, no, like this was online. Like
Uh-huh.
all of this was online. And at that point, like I was very skeptical to stuff online.
What year was this?
This was 2012.
2012.
2012. This was towards the end of 2012, because I started studying with, like, just paying for his services from January 2013 all the way to June. So June 2013 is when I placed my first trade. So I thought he was a scam, and I asked, if he would meet me, or if I came down to Miami and took him out to lunch, because I want to make sure, like, you're real. You're not like a scammer, right? Because online there's a lot of that. And he was like, my time is for my students, and he's like, you're not even a subscriber to my newsletter. So I subscribed. I'm paying that monthly fee. I'm just watching what's happening. I'm tuning into the chat room. I learned about the whole, buying the rumor, selling the news. And at the time, I will say, like, I was very fortunate in the time that I started in the market, because we're coming off the '08 crash, right? And I placed my first trade in June of 2013. It was HMNY, a company that Google took a stake in. So Google was actually the first company that wanted to do those, like, virtual reality glasses and stuff like that. And
The Google glasses?
yeah, so Google took a stake in this company called HMNY that,
Himini.
yeah.
Yeah, I remember, yeah.
So my first trade was like $34, and then the second day when I traded that same stock again, I made like 1,500, and it quickly became a snowball effect. And I went through my downs in the equities markets, where at one point I started believing in these companies, and by me believing in these companies, I was holding positions a lot longer, which I caused me to take my first biggest loss, which was in February of 2014. I had relocated to Florida. Me and a couple of guys that we met at the Penny Conference in 2013. We were like, yo, we're single, no kids, nothing really tying us to our current location. Let's get together and help each other grow as a traders, right? So we rented a house. We would pay the rent for the first 6 months upfront. So all we had to do was just focus on trading. We moved into the house and we're like helping each other. And February of 2014, I took my biggest loss. It was a company called WPCS, first company on a major exchange to own a crypto exchange, right? So I dabbled also in crypto, so I've been involved in crypto since 2014. And that was my biggest loss. And I believed in the company so much because I saw, like, digital currency being the next thing, just looking at human evolution and how we've progressed. So I took my biggest loss. It shot my confidence for about 3 months, where I would analyze, but I wouldn't pull the trigger. And then eventually one of my roommates is like, instead of going into 3,000 shares or WAP, drop it down to 500. Start building, that rapport where, like, okay, you're actually executing and you're getting it right. And if you get it wrong, hey, you're losing on 500 shares versus losing on 3,000 shares, right? So that's the progression to that. From that, I went into options. I did well in options for a little bit. I hated the the disadvantage that retail traders have when we're trading certain equities and when we're trading options overall, because institutions are able to enter and exit out of the dark pool. We don't have access to that, right? So I didn't like that disadvantage, and then I went into futures and commodities, which is 6 days a week, Sunday to Friday.
So the dark pool, can you explain that a little bit? Like how the institutions can enter and exit and retail can't?
So there's a thing called the dark pool, where institutions and, like, high net individuals that have, like, huge positions in certain equities, they're able to exit out during the off hours, so they don't affect the price so much. Like for example, when Elon sold his positions in Tesla to be able to purchase Twitter, he did that all on the weekend through the dark pool, right? To not affect the share price too much. So same thing with options, because like if you read the rules of options, it's from 9:30 a.m. Eastern to 3:59 p.m. Eastern. But somehow at 5 a.m., 6 a.m., institutions are able to close out of their positions and you can't, right? Or they're able to enter positions and you can't, which it's a massive disadvantage, but it's the way the game is, and we're not part of those clubs, so we have, to make do what we can.
Yeah.
Yeah.
Okay, so then options, and then where else did you go from there?
Forex, foreign currency. There's a big stigma about, foreign currency being a scam and this and the third, but it's like, as you travel, it's like you're converting US dollars to euros, to pounds, to dirham, to Turkish lira, to pesos, right? So foreign currencies is a $5.4 trillion a day industry. So when you hear somebody making half a mil, a quarter mil, a mil, in that industry or in that sector, it's not far fetched because $5 trillion moves back and forth. So I did that for a little bit because the broker that I was using, one, when I would enter equities, and I would hold overnight, and like say I want to exit out in the morning, and let's say there's news at like 6 a.m. and the stock spiked. I want to cash out. I can't. I have to wait till about 8:15, and this was like TD Ameritrade, which was a massive disadvantage because I would literally just watch my profits dwindle because just before the market opens, massive spikes tend to have a bit of a retracement. So I got really annoyed with that. And with Forex, it's 23 hours a day, 6 days a week as well, from Sunday to Friday. And what I liked about it is that the leverage. So you could literally open up a $500 account, a $100 account, and if you're really skilled, you could really grow that to 2, 3, 5, 10, 20,000. And there's been often times where I turned $100 into 2,500 in a matter of 2, 3 weeks just to sharpen my skills.
So with forex, okay, it's possible, but like, why do a lot of so people come in with the wrong mindset for it? Is that why they fail and they don't know what they're doing?
Yeah,
So it's just so it's like you got to be skilled first, and then you're able to do that.
yeah, because it's like a lot of people, they look at this person, oh, this person just turned, 500 into 20 grand, right? One, they don't really say the full time, but then also like you don't understand that person's experience and level of knowledge that they have in that particular market. So people come in thinking that they can mimic 10 years worth. Like someone that just starts right now, they can't make the same returns daily or weekly as you consistently without having the same experience or level of understanding that you have. So that's something that's it's a major misconception. But then also because certain regulatory tape, most people get involved in the U.S. They get involved with these unregulated brokers, right? So it's like you getting involved with a pump and dump. It's a fictitious company that's being promoted. People flock into it, and then the rug gets pulled under you. So, and because all the regulated brokers don't accept U.S. clients because of paperwork and again regulatory nonsense. So there's a misconception in that, but it is a great way to build and grow your money or to make something out of nothing, because stocks and penny stocks are not the only game in town.
So with forex, so we were talking about this earlier. It attracts a lot of this like Miami influencer crowd.
Yeah.
So why is that? Because people they think they can just grow easily a small amount, and they're following these like Furu's courses. Just because they're flashing Lambos or something.
Because they're flashing Lambos and cars. So the thing is that people are so fixated on this image where it's like if you drive a certain car, they think you're successful, right? But they don't know that that car might be a lease, that car might be a rental, or that person might be deep underwater, trying to make payments on that vehicle to be able to portray this lifestyle of success and this whole celebrity lifestyle. But it's like, look at how many celebrities that they went with this massive lifestyle, and then a few years down the road, they have nothing to show for it. They're back to being broke. So that's what people feed into. and they're very like, whether they consciously admit it or not, they're attracted to that. The Lamborghini, the Ferrari, this fast life, this jewelry and stuff like that. Like most people don't even know that like rappers and some of these celebrities, the jewelry that they wear, it's fake one, or it's, it's borrowed from a specific jeweler to, promote them, to get people to, go buy jewelry from them. So it's all, I want to say like a Ponzi scheme, but not necessarily, but it's just selling the wrong image and people feed into it, and they don't really take the time. Like, you are more knowledgeable and have way better information than a lot of these guys or individuals that are in Miami portraying to be, oh, they turned $100 into $1 million. It's possible, yes, in that area, but just because you do it doesn't mean the next person is going to be able to replicate it. You know what I mean? So, and people think like, oh, yeah, I can do it. He did it. I can do it. But the biggest thing is you don't know how many years of experience they have, how many accounts they've blown. I've blown up accounts. How what number of cycle of markets that they've gone through to be able to get to that point. It's experience.
So did the Lambos and everything, did that ever work on you early on? You don't seem like the guy that ever would be attracted to that.
So I love cars. Like I'm an adrenaline junkie. Cars, motorcycles, things that goes fast. I love that. I've been into cars since I was like my teenage. But I don't feel that I need to flash it or, you know, be part of that image that is, oh yeah, just because I drive this fancy car means I can talk to you a certain way, or that I'm more successful than this person, because there are people that make way more money than me and they're driving Honda Civics, Honda Accords, Chrysler vans, right? So the car thing, like for me, it's more of like a passion that I want to, start a collection, but that's once I've decided where my base is going to be. I don't see it as, and I'm not going to do it for the sake to show people like, oh, I'm successful, because I have nothing to prove to anyone.
Yeah. I'm the same way. I thought about getting an exotic car last year, and like there was this like car hacking. I took a car hacking course and everything, and I was like, I'm gonna get it. And then I'm like, why am I getting this thing? It's just like, I guess it would be to please others and to feel cool or something. Like, I don't need that. Like, I like to travel a lot. You travel like 90% of the year, so this car's gonna sit there. In LA. So California, the insurance companies left. So like exotic cars, most of like 99% of them are not insured. So having a car in a place where there's a lot of riots and a lot of craziness, you got the natural disasters and stuff, it's a potential to be a total loss. And if you're traveling, you gotta like start it up and stuff. I don't know how that works, but like it's gonna be sitting there rotting, rusting. So it's in LA, for also Los Angeles, you got the traffic, the parking. So it's like, why would I do this? But then I don't know what it is about people, because we were talking about it. It's like all types of people, they want to see the material things. It's not just the certain people. It's for everybody. And like, I don't know, psychologically, subconsciously, they're attracted to it.
It's I want to say like it's a way that like society has programmed people, where like depending on like what you wear or what brand you're wearing, they calculate either what type of level of respect they're going to give you, or how serious they take you, right? And there's a lot of people that, they don't wear name brands or flashy name brands, or they might have name brands, but like some that you might not even know or be able to pronounce, and they look no different than something you can get on freaking Payless or H&M or Zara, stuff like that, right? So, and those are the people that have like real wealth and freedom. I've seen a number of individuals that have come into trading. They did the cars, the Lambo, all that stuff, but then they get into a point where they have a eureka moment, where it's like, wow, like I'm being a slave to this, where now I have to make a certain amount of money to upkeep this image, versus just having the freedom. And me personally, like I love the freedom to just pick up and go whenever I want. Right? We were in Madrid. We talked about this, and literally I came from Dubai, well, Dubai, London, Orlando, and here. I'm able to just pick up and go whenever I need to be. I can literally go home tomorrow. You know what? I feel like going to, maybe I want to go to Asia. Okay, pack, put my laptops, I'm off to Asia,
Yeah.
right? You can't really do that.
It's beautiful to be able to do that.
Yeah, that freedom. So all these individuals that they had that eureka moment after they fell into the trap of getting this car, getting this house, penthouse, and this and the third, they went the minimalist route. They got rid of all their cars, and the money that you're putting into that asset, that to that liability, because it depreciates unless you get something that's like one of one, or there's like very limited supply of it. Then yeah, so I look at things on an investment aspect where, is it really worth it, and is it something that I really need? And for me, exotic cars, because again, I have a lot of people that ask me, oh, like, if you're doing X amount a month, X amount a week, why don't you have an exotic? Why don't you have a Lambo? Well, what sense does it make? I travel 90% of the year. Like this year, I've probably only been home maybe a total of a month and a half. And mind you, we're like, what? We're in the 7th month.
Yeah, July, man.
July.
Yeah,
We're in July.
mid-July.
Yeah, we're mid-July, and I've only, so in 7 months, I've only spent about a month and a half home. So what sense would it make for me to every month pay for a residence, pay for a vehicle, pay for insurance for a vehicle that I'm not even using, right? And then you have to entrust somebody to either maintain that vehicle for you to,
And they're gonna race it.
yeah, and you don't know, like they might race it, they might go out, get into an accident, cause a damage, and because they're not on your insurance, guess what? There goes that money. So for me, I look at things in a very objective way, and I don't find it worth it for me until I know that this is going to be my base. I'm going to have my home here. I'm going to have my garage where, because at the end of the day, people can be envious of certain things. And I've seen people just scratch other people's car just because, just for the hell of it. You know what I mean? And you can't rationalize or even like, oh, why would somebody do that? Who knows? Like, your guess is as good as mine.
Well, in LA, they definitely do it for no reason, you know?
They do it like that on the East Coast too. They do that, and I've seen it, like, and it's such a shame. Like you work so hard to get somewhere, to obtain something, and someone that does not know you from a hole in the wall, they're quick to just vandalize your stuff. And so for me, yeah, here in the U.S., I'm just like, it's not something like I'll rent a vehicle, I'll rent a car out, exotic, when I go somewhere. It's like, you know what, like, yeah, let me have some fun, get the adrenaline kick, give it back, keep it going about my business. Yeah.
And who are those entrepreneurs? You mentioned Warren Buffett drives this car. Who else was it? Like Bill Gates?
Warren Buffett, Bill Gates. So Warren Buffett, worth 130 billion, drives a Cadillac DeVille. Still lives in the same house that he paid like $50,000 for, right? Jeff Bezos was worth between 3 to 10 billion, and he drove a Honda Accord. Like, the man drove a Honda Accord being worth 3 to 10 billion. And I heard a story before of like of a guy that was a millionaire, and he was like a janitor, washing, cleaning toilets and stuff like that. And when people find out, like, oh, like, he's a man, it's like, oh, like, what do you do it? Like, he just liked what he did, and he didn't want it people to know. And just because you're a millionaire doesn't mean you have to be like all flashy and all these name brand clothes and stuff like that. And more so this year, like, people finding out that a lot of these things that they're paying 3, 4, 5, 6, $10,000 for, is costing these companies pennies to make them in China. And then the reason they're able to say, like, oh yeah, this was made in Italy, is because they put a little tack on it. Like, you know what I mean? So there's a whole misconception about materialism, and if you have all these materials things, you're not really planning for the future, right? Because what happens if we have another pandemic and you lose your job, you lose your income? What happens if your house burns down? You don't have nothing for it. You know what I mean? So all that investment from shoes to bags could disappear at a snap of a finger.
Yeah, I know some people get caught up with that lifestyle, like keeping up with the Joneses and stuff. And I know, like, when I first started to like get to like my traction towards profitability with trading, I had to kind of like minimize my bills and my living expenses. Because like before trading, I kind of was like trying to keep up with like my peers, like in my architecture career. Like with the wage I had, the salary, I was trying to like, everyone's living on credit cards, and you got to have a BMW 3 Series, even though you can't afford it. The 3 Series, the regular. But like I'm living way over my means, and a lot of people Americans live like this. So then if you want to get to trading, how are you gonna do it? So it's like I see it as like you sacrifice a few years, and then like Jeff Bezos was driving that car worth a few billion, but now he doesn't drive that car. He has like a yacht. You know, he has a house in Beverly Hills. They have a rule of
The height.
the height of the
The
bushes
fence,
or something.
he pays a fine
Yeah, every day. He doesn't care.
Every day. He doesn't care. Like that right there is when like that's true FU money, right? And for me, one of the things that I said to myself was like, I'm not doing exotics until I have FU money, right? Because then at that point it's like, okay, you have to start spending some of the things that you're building, right? Because you can't take it with you. Like we're all here on borrowed time. So a lot of people here in America or just in general in the world like fall under that stigma of trying to live over their means to impress people that really don't give a shit about them, or at the end of the day they're not living your life. So it's like plan for the future, every so often, yes, enjoy your life. If you have, if you're trading or if you have a business and you end up having like a phenomenal quarter, yes, go treat yourself. But treating yourself doesn't mean like, oh, you have to go do something that could potentially be a debt. And if you don't have many assets that are actually like giving you money, or like, you're getting cash flow, then you need to get those and have, those pay for whatever lifestyle that you wish to have.
And now for trading. Okay, so you went you end up at Forex. So now so with small caps and micro caps and those pump and dumps, was that long or short or both?
I mainly longed. I never really liked shorting just because you can lose more than what you put in. When I long, if I put $6,000 worth in shares in a penny stock and it goes to crap, I'm only losing the 6,000. But if I short a couple thousand shares, like say $6,000 worth of shares, and this thing goes, supernova, like KBIO, right?
Yeah, Martin Shkreli.
Yeah, so that I was trading that when it was at 18 cents. I rode it all the way to $9, cashed out.
So, do you remember the KBIO? I think you have a better memory about that one than I do. I was a newbie when I saw that.
Yeah.
So, want to explain the KBIO? This is by the way, before he explains it, KBIO was like a super squeeze that happened in the after hours, I believe. Martin Shkreli changed the price of a drug and that manipulated the stock.
Yeah.
So
Martin Shkreli, he had two hedge funds, right? And he was manipulating the price of KBIO. KBIO started off at 18 cents. And the drug that he was manipulating and increasing the price on is an actual drug that like people actually really need to live. Like if these people did not get their drug, like they were gonna die. So ethically, like there was some ethical issues there. So at this time, I caught it from 18 cents to about $9.
So it went from 18 to $9,
but
in one day.
In one day.
Okay.
Then it went from...
You traded with SureTrader. So SureTrader, those that don't know, it was an offshore broker in the Bahamas. It's blown up. It doesn't exist anymore. Yeah. But it was a way to get around the PDT.
Yes.
So anyway.
Correct.
Yeah,
Exactly.
Anyway.
SureTrader, most offshore brokers, you're able to
no customer service, by the way, right?
Yeah, horrible. Yeah. You're able to bypass the PDT, which is pattern day trader rule for those of you guys that don't know, which basically as a U.S. citizen, you're subjected to, meaning if your account is below $25,000 in equity, you only get 3-day trades per week. So, and that whatever day trade you use, let's say today you use the day trade, Friday, for next week you have 2 up until Friday. The one that you use today, you'll get it back on Friday. Yeah. So I'm trading with SureTrader, and I went long. I rode it to 9. From 9 for literally 2 weeks.
Wait, you rode it from 19 cents to
$9.
How long did it take to go up?
It was literally a matter of like 5 hours.
Yeah, it was crazy.
It was crazy. Yeah. After that,
by the way, Tim Sykes took a big loss on that. Well, not a regular loss.
Trying to short.
Yeah, trying to short it. So Sykes was short. Sykes was short the KBIO, and then Michael Good also. I remember because they were like the mentor that he was short and he had to get out for a loss. Yeah, that thing. But do you know the percentage it was up?
Oh, the highest it went was $54. It went all the way to...
Yeah. That was one of the squeezes.
Yeah, because from 9, it ended up going to 20-something. From 20-something, it went all the way to 30.
So 40. For like 2 days, or?
No, it was like the course of a week. Like within a week's time span, it went from 18 cents all the way to $54. and then they halted it at 54. I was completely out in the nine, and I didn't want to touch it after that. But then I just kept watching it, just go, 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 tearing up. And then they halted it at 54 for about maybe 5 or 6 months. And then when it reopened, it opened at like $5. So anyone that shorted it at 54, they banked on the way down. But you had to wait like 6 months for that.
Yeah, and probably the borrow rate to hold it
Possibly,
overnight.
yeah. So, but yeah, so that was like one of those.
So I was a noob, fresh noob, like my first month or two in, and I'm watching like, oh, like I don't know what I'm looking at, but like it still for me it counts as experience because I got to see something outlier,
Yeah,
you
absolutely.
know?
Anything that you have, win or lose, or just even there watching, like it's experience because you're actually there watching to see how this thing plays out.
Yeah.
And then either you jot the notes down or you memorize it. Like I remember a lot of the plays that I took that I made a good amount. I remember the plays that I took that like I lost 48,000 dollars on, and it was just like sheer stubbornness and hoping and wishing that
Yeah.
like, oh, I know it's gonna turn. Eventually it did, but my timing was off.
Yeah.
Yeah.
So, all right. So you longed that, and so you did well with longs.
Yes, I did very well with
So
longs.
then what? You just wanted to try out options, or you wanted to try out forex, or you were doing
So,
all together?
no, so options, I got into options because I could always spot reversals, right? But I just wouldn't take it. I didn't feel comfortable shorting. So I classified myself as a bull. And it took some time for me to just take away the bull and bear and just like, I'm a trader. If I see a potential to short, I'm shorting. If I see a potential to long, I'm longing. But with the blue chips and the and more expensive stocks, for me to like really trade them, I had to do the option side where now it's it might cost me maybe 10 grand to take a position, and I'm making 100, 200, 300% return on that put position or on that call. So it was just another tool to add to my bag of tricks because I believe in being like a well-rounded trader. So I don't want my niche to be just one specific thing because I saw from other people that had one specific thing. At times during the year, there was like no place for them. Like with small caps, there's times in the year, like maybe 3 or maybe like 4 months out of the year, where like it's dead, right? And it's like I don't want to be subjected to that because the goal was to do this full time. And in order for me to do this full time, I need to be able to be versatile where okay, small cap is dead right now. Okay, cool. I can trade the large caps, the blue chips, and I can do it via options, which honestly it wasn't that hard. Like once you understand the whole the delta, the time decay and stuff like that, it wasn't, at least I didn't find it that hard to be.
I got you. And that place that you wait, so you were living with a few traders that you met at a conference?
Yeah, we met at the Penny conference in 2013 in
And do you
Vegas.
still keep track of those
Only
guys?
one. Like only one. Like I went to his wedding. Like we kept him at cool. Out of so we started off as 6 guys. It went from 6 to 3. Myself and two
And
others.
how long of a period?
We were there for like a year.
Also, it was hardcore. It was like
Yeah,
for a
yeah,
year.
yeah. Like we were there hardcore. Like, but yet again, like for me, it's like I'm paying for a house that I was hardly there. Like I'm in Fort Lauderdale. I'm traveling. I'm in Cuba. I'm this.
So you were always traveling.
I was always traveling. Like trading opened up the door for me to be able to just go places. So I would find myself, I'm paying for an apartment. I'm paying for a living space, and I'm not really there and whatever. So after a year, one of the guys wasn't the Indian guy wasn't doing too good, and he decided to go back home. My friend, which he's Billy, which we're still very close friends, he wanted to go back home because he met a girl and stuff like that. And I had at that time, I believe uh, I had like met someone, so I was flying back and forth from Florida to the up north, and it just made sense. So we ended up just
Now
like
that
going our
experience,
separate
did
ways.
you like learn a lot during that, like with trading? Did that elevate your trading, or was everybody like a newbie?
No, like we all like one person was learning from Paul Scolardi, super trader. Myself and Billy, we were both learning from Tim. The other guy, I think he also had Nate. And yeah, it was a good experience because being able to when I took that big loss.
Mm-hmm.
If it wasn't for my roommate's suggestion that I cut down my size.
Which loss was this?
This was WPCS,
Oh yeah, okay.
the crypto play. Like I believed in that company so much. Like I bought it at 3. It spiked after hours. It spiked to like 5:30. Originally, I was supposed to take profits, but I'm like seeing that spike after hours. It validated my analysis. Where like this thing was going to go to $7, $12 plus, like to the moon. Obviously, you see right now how crypto is doing.
Yeah.
So this was my perception of the digital currency back in 2014. And although it didn't pan out because the CEO diluted the shares, so my $3.60 share went down to like a dollar and something. Then they were diluting the shares. And when it was all said and done, the stock was going to be worth less than 25 cents based on the amount of shares that they were going to make available. And that just rocked my confidence in the market where like I don't trust no stocks. Like yes, there are some stocks that they long term based off of the interest of the people and the times that we're in. They're gonna be around for some time, so there's some security in there. But I still wouldn't put the full house on it. Like, and I was ready to bet the house on this stock, and if I did, I would have lost everything.
Yeah.
Yeah.
So crypto back in 2014.
Crypto back in 2014.
What did you think of crypto in 2014? Because we just hit all-time highs in
Yeah.
Bitcoin.
Yeah, I thought it was the future. Like, and obviously we're seeing it now, right? And the reason I saw it was the future is like I'm big into history, right?
Mm-hmm.
So I look at our history as human beings, right? Where we started back in the day, the currency was commodities were meat, produce, wool, silk, rare metals, gold, silver, rubies, right? All these things, like these were the ways that people paid. The Chinese developed, well, the Romans developed the currency, a monetary system. The Chinese perfected it, right? And from there, they were the ones that actually started recording uh, um, your monetary value, right? Paper and stuff like that. And then from there, we went into these debit cards and credit cards, right? In the 90s. So we actually, if you think about it, when you go to a bank and you deposit a check and they give you a debit card or a credit card, that is a piece of plastic that it has digitally recorded your net worth or your monetary value with that specific institution. So when you go somewhere, you're not paying for things cash, you're digitally paying for it. So me looking at this and I'm like, wow, like the digital age actually started in the 90s, right? Because the minute they issued out debit cards and credit cards, that's digital. You're no longer physically paying. So I'm like, okay, if this is the route we're going and this is just the beginning, and I'm like, and looking through history, how we evolved from barter of services to then rare items and commodities and gold, copper, wool, silk, all of this stuff. I'm like, okay. And then, I mean, hell, even humans, right? Humans were a commodity from even back in the day, like going, I mean, you go back to like Jesus Christ time, like there was slavery from all aspects of it.
Yeah, they got the South Sea bubble.
Yeah.
You know?
So looking at that and like really realizing that like wow, like we started the digital age in the 90s. So I'm like, okay, this thing is just gonna go forward. And when I came across that company, that was literally the first company on a major exchange to have a crypto platform, and I'm like, this is the future. So that just goes to show you how early I was to it. And at that time, Bitcoin was fluctuating between $400 and $800 a coin.
Damn. Did you get any of those?
I did, but I had an issue in 2017 when I went to Cuba. So when I went to Cuba, Bitcoin had spiked to like 2,700.
Mm-hmm.
I was in Cuba for a week.
What cities did you go?
I stayed in Havana.
In Havana.
Stayed in Havana. Went to a couple of beaches out there and stuff like that. It was fun. Cuisine wise, it's not the greatest because they're limited in what they have, but they had great.
Did you stay in the resort or you went to the city?
No, I stayed in the Airbnb. Like in the
Yeah, you saw how the people are. Like
yeah, I saw the people, the locals, hung out with them and stuff like that. Yeah, it was a great time. Like had a host that like took me and my friends around and stuff like that. Cause the minute Obama opened the door, it's like for the longest time, like Cuba's that, it's that
Yeah.
forbidden thing.
I'm a half Cuban, you know that,
Yeah,
right?
yeah, yeah, yeah.
So
So I jumped at the chance. I'm like, as soon as they opened that door, I was like, oh, we're in there like swimwear. So we went. We had a great time. I was with Coinbase at the time. I still have Coinbase, but at that time, I opened up my platform, and because I opened it up while I was in Cuba, they liquidated my position.
wait, what?
Yeah, they liquidated my position. They
Yeah.
gave me back my initial investment.
Coinbase.
Yep, but none of the profits. And
None of the profit.
none of the profits, just my initial investment. And I sent documents showing them like, listen, I was just there on vacation. I live in the U.S. I'm a U.S. citizen. No go.
Wow.
So that right there.
You went to Cuba with when Obama opened it up. There were certain ways you can go.
Yeah, like you just say like, oh, you're going there for like a religious tour thing, whatever, and yeah. Like and honestly, they didn't really bother you. Like you go to the airport, you pay for the visa, you pay for the visa at the airport, you fly in. As long as you're not staying in any government-owned facility,
Yeah.
you're good.
But Coinbase didn't care.
Nope, they gave no shits.
Because you tried to log in.
No, I logged in and I looked because I'm like, I got an alert. So I'm like, all right, cool. Like, I want to see what I'm up. Biggest mistake ever.
Yeah.
Biggest mistake. So that put a very ill taste of Coinbase in my mouth. And from there, like a friend introduced me to crypto.com. No, a friend introduced me to crypto.com and I fell in love with them and I've been.
Yeah, you're mentioning always like they have the stadium here.
Yeah.
So what do you think of self custody?
Self custody with
I used to do some crypto podcasts when I first started the YouTube channel, and I didn't know anything about crypto or Bitcoin. So I had a friend of mine, like we made a podcast and he's teaching me in the podcast. And then like I had Coinbase and he said, by the way, at that time, like all those what is it, centralized exchanges, there was some problems. It was like panic.
Yeah.
So he said, you should put yours in a self-custody in this thing called Ledger.
Yeah, like a ledger. Okay, yeah. Those are great. I mean, like all my major crypto assets are in a nano ledger that's in my safe. Yeah, because it's like when I started doing that, like when things started hitting the fan. So, for example, towards the end of 2019, they brought these charges against XRP Ripple, right? And everyone started panicking. They were going to delist it. So when they were which they actually did delist XRP, it went to like 12 cents.
Yeah.
And I bought it at 24 cents, and I just kept doubling down because I'm like, this company is going to replace Swift, right? So the thing is, like, people are so quick to go off of what someone else says versus doing their own due diligence and like having that conviction, like, okay, if I'm wrong and I lose, I'm doing it on me. I'm not cashing out of something because someone told me that they heard from this person and that person with no understanding, right? And like no research. So I told everyone, yo, double down. They're going to delist it. So I took my XRP off of crypto.com because they were also going to delist them where as a US citizen you couldn't purchase it, but everyone else can. And what happens is these institutions, they will, fabricate these things to cause something to drop in value, so they pick it up at pennies on the dollar, and then eventually all that stuff goes away. And look what happened to XRP recently. It hit, a few months ago, it hit like $3 and change. Now it's hovering around $2 and something. In the next 3-5 years, it could be well over $50 a coin. And when I first got into XRP, I was telling people $100 valuation. They're like, oh no, because of the supply or whatever. But I'm like, you can't quantify or measure the interest that people are going to have in one specific thing, or like the massive rush that people are going to go for it. It's the same thing when people said, oh, Bitcoin would never see 20,000, never see 50,000, never see 100,000. Hold and behold, here we are, 117,000. I mean, so it's like you can't quantify, and especially people that are so adamant about it, they've never looked at a chart. They've never looked at a daily, a weekly, a monthly. They have no understanding of the monetary system, our society as a whole, the interest, because as a collective body, like we're the ones that give all this value to these asset classes. And yeah, and it just blows my mind where people can like wholeheartedly sit there with a serious face and adamantly like, yeah, oh, XRP could never go to 100. Now they have $1,000 to $10,000 valuation on XRP, and more more banks and institutions outside of the U.S. are adopting them.
Mhm.
So, you know,
Yeah.
I stand with what I come across, and if I lose, and it's on me.
Yeah.
Yeah.
So okay, so you went from small caps to micro caps, options, forex, crypto. So you just enjoy the financial markets, like just like you're in the world, and like because I've been around some big traders, especially when I was in Puerto Rico for a couple years, and they call themselves like financial traders.
Mhm.
And I remember like when Ethereum crashed one day. There was some kind of like market wide crash for crypto like Ethereum, and they stopped that trader, for example, stopped trading the small cap, the gapper of the day or whatever, and he switched over. He shorted Ethereum, and then he went back and traded the small cap, and then Peloton crashed because someone fell off a treadmill. This guy had Bloomberg terminal, and then he shorted Peloton right before the crash, and then he'll switch back to whatever he's trading.
Yeah.
So he's trading crypto, shorting Ethereum, and then trading, short selling Peloton off a news of breaking news, and then he's like going back and trading whatever biotech is squeezing at the moment, going crazy. So is it? And when you talk to him, he's like, I'm a financial trader. So he trades everything. He understands like patterns, charts. He has experience.
Yeah.
And so what do you think correlates with everything combined? Is it the charts? Is it technicals, or like what? Because you don't just use technicals. You talk
No.
like the overall.
Yeah, like the overall
Yeah.
picture, because like there's a multitude of things that will affect one instrument from moving in one direction or the other. So I pay attention to geopolitics because those offers an opportunity. So I guess like that gentleman, I guess you could classify me as a financial trader because I can trade anything from options, small caps, large caps, mid caps, forex. I mean, I was trading forex last week. I traded forex when I was in Dubai, but my main thing is futures and commodities. Sometimes like if there's an opportunity, like I'll take it. Like recently, I've been trading gold. There was a while that like I went without trading gold, and I'm trading gold on the future side and the forex side, right? Because on the forex side, I can trade bigger position with less capital. So fundamental, technical news, geopolitics, and just understanding how certain things affect certain areas of the market. For example, when we had the war with when the war between Russia and Ukraine started, right? Market dropped. Um, Oil ran to like $125 a barrel. Wheat skyrocketed, right? So these are all things that you can trade. You can trade wheat, you can trade coffee, orange juice, sugar, rice, soybean oil, pork, live cattle, which is beef. So there's a multitude of things that you can trade. So for me, like I said, like I believe in being a well-rounded individual. It's like those triathlons,
Yeah.
those athletes that
Uh-huh.
they can do multiple
The
sports,
decathlon.
decathlons, yeah, like that. So basically, like that's what I've aspired to be, because you could sit here and learn and be proficient in one area, great, but that area is not always going to yield the returns that are desirable. So in order to be able to do that, you have to be able to be fluid in understanding these other areas. And honestly, the charting, it's the same all around. Like being able to find whether it's major support on a higher time frame, supply and demand zones, or liquidity areas, depending on where or who you've learned from. But the one thing that I've learned about everything, regardless of the terminology, everything is based off support and resistance, right? If somebody's like, oh, I'm waiting for it to come in, test this liquidity area. That liquidity area, whether if it's to the downside, it's going to act as support. If it's to the top side, it's going to act as resistance, exhaustion, you shorted. So those basic fundamentals are universal. It's just individuals, they'll change the name to fit their narrative and whatever community or whatever people they're trying to capture. And that's all fine and dandy. But it's like, I like to break things down to the bare bones. And it's like, okay, in the most basic of terms, it's support and resistance. That's it.
Yeah.
And what I've explained to people is like, when you see a candlestick, if you're looking at a candlestick, that's a mathematical equation in a physical representation, right? That bar, that wick. So The numbers is universal. From here to China, we could speak a different language. You speak Spanish, I speak Portuguese, but a car is a car. An automobile is an automobile. You have different characters that will represent that same thing, and I have different characters that are going to represent it, but it's the same. It's the same item, right? So I have that understanding when it comes to this market, and then it's just also understanding what causes it to move. Certain things are going to cause certain sectors to move or certain asset classes to move one way or the other. And once you have a grasp of that, it's I find it to be easy, but some might disagree.
So how did it come together for you though? Because you didn't learn all this from like psych.
No, hell no. No, 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 no offense, no offense, but it's like because with Sykes, like he for him was like Forex was a scam.
Yeah.
Futures was a scam, right? But it's just like just because something it's not what you're normally used to and it's outside of your norm doesn't make it a scam or bullshit, right? So he has a niche, power to you, and he's like really maximized that niche. But again, even there were times that like the sector was dead, and then sometimes it was hard to borrow shares. And the few times that I did try to short, it was I did all this analysis. I waited for the exhaustion. I'm ready to short. No shares available, or out of the 2,000 or 3,000 shares that I wanted to short, I only got like 10, 200, 100.
So, just so people know the context. So back then, I would say Sykes was primarily short from 2000, I don't know, the bear market, 2008 all the way till like 2016. And then he switched to long. But back then it was very hard to borrow shares. You had to wake up early in the morning and take the shares, and sometimes one person like would take all the shares. If you have a big account, and then the other people can't locate the rest. So shares were very scarce. There was like a scarcity for locates. Now we have a lot of locates.
Or they gave you fake locates, right? And then you would get bought in. Or they would charge.
They will give you fake locates and you get bought in.
Yeah, and then you would get bought in. So all of that it's just not a great recipe for success. So I hated it. And I hated the disadvantage because again, the broker that I had, I couldn't pre-market trade. If something like popped a pre-market, I couldn't short it until about maybe 8 a.m., right? Whereas I had a previous broker that would allow me to trade from 6 a.m., which was great. And then you have higher net brokers that'll let you trade from 4 a.m., 5 a.m., and so forth. So for me, like I was always good with numbers and graphs and charts. So I was a bit of a bookworm growing up in school and everything like that. So I think that helped me a lot because I'm just good with numbers and graphs.
So how did you get the information? You went down rabbit holes like with books or?
I went down rabbit hole, books, asking questions to people in the industry that would answer it. So I met someone that
You were very good with networking too, because you were on the Sykes TV show.
yeah. So networking has also been another thing that's like really expanded the horizon from, meeting people that work in the IRS, meeting people that work specifically in acquiring properties from tax liens and stuff like that, meeting people in acquisition firms, hedge fund managers, or people that worked in hedge funds and all the different things. It's like hedge funds literally pay millions of dollars a year to get information before everyone. It's like, you ever seen that show Billions?
I used to see it, here.
So that is one of the like most accurate depiction of what happens in the financial world, like on the hedge fund side, from the backside dealings to the bribery to the paying hundreds of thousands or millions of dollars to be able to get information that they're gonna make buku money over. So yeah, so like I went down through that, and again, in pursuing to be able to be fluid in whatever conditions the market is, you have to try to learn the different things. It's like you play soccer or basketball. You can sit here and all you know is basketball, but if you're a true sports fan, right, you're going to learn about basketball, then you're going to learn about baseball, football, European football, tennis, golf. And the more that you take it upon yourself to learn about these things, the more capable that you're going to be to reap the benefits of any situation. Another example, like with the whole geopolitics, right? I pay attention to what happens in China. Something happens in China, it affects Europe, and then about 4 to 6 weeks after that, it affects the U.S. You remember a few years ago the Evergreen situation?
No.
Evergreen is a flagship development company in China, and they were running the risk of defaulting on their loans, right? And that sent people in a frenzy where they ended up having a run on banks. So a run on banks is people going to the banks to take out their money, and the bank doesn't have your money there for you to be able to take it out, right? So that's another thing too that I didn't know until I went down that hole, and I sought it out, where I thought once you deposit the money, whether cash or check, it's in the bank, it's in their vault. But no, it's only about maybe 5% of whatever their daily volume that they keep there. The rest they invested, it goes elsewhere and whatnot. So when I saw that happening in China, I'm like, it's a matter of time before it happened here in the US. So I started, recommending friends and family, like, hey, let's buy some gold. And this time gold was like around 1650. So I suggest, like, look, let's stop buying because this happened in China. It's a matter of time before it happened here. Hold and behold, a year and a half later, the SBA happened, right? They default, whatever, and some people and companies weren't getting their pay and whatever, and then 100 other banks failed within that same time. Gold shot up, and then as you see where we are now, gold recently made like what 3,500 all-time high, and it's just going to continue with a certain political teeter that we're experiencing. Before the end of the year, we could see gold at 4,000, right? So stuff like that.
So we were having breakfast today, and you were telling me about the people that have like analysis paralysis. So what separates, like, you think so you're drawn to this overall big picture and geopolitics and gold and crypto and forex and the commodities and the wartime and like which commodities are good for it. So so how can people do what you do? It's like a certain personality, or because like we were talking about, like you had like a student and he just overthinks it, and then imagine you come up with this crazy thesis, you do all the analysis like crazy, and you don't place a trade.
Yeah. Yeah.
So
So analysis paralysis happens from being in a scarcity mindset where, like, you're fearful of losing, right? Anyone that comes into the industry, it's like losses are gonna happen. It's like waking up in the morning. Like, first thing when you wake up in the morning, first thing you have to do is put your feet on the ground, right? Support yourself to get up. So losses will happen. How big of a loss, that's contingent upon you and how disciplined you are and what type of risk management you have. So the people that are having analysis paralysis is that they have suffered some kind of loss, so they're not in the best financial situation. So they constantly second guess themselves, even after they do like a massive, great analysis and they find the levels, but then it's just like they second guess. And every time they second guess, it ends up being a loss because by the time they do find the courage to go in, it's too late, right? You miss that ideal entry, you miss that ideal condition. So, and I mean, myself, I had that when I took my biggest loss, and it took some time for me to get out of it. And now I try to tell people, like, if this is what you're looking to do, take the smallest share size you can. The monetary, the dollar return that you make on that trade, it's irrelevant. It's not important. What's important is that you took the trade and you were right, or you took the trade and it was a loss, but that loss was also part of your plan in the event of worst case scenario, right? Worst case scenario, okay, this thing goes against me, I lose $50. You had the courage to take the trade. So the more you start doing that, the more you start building the confidence to be able to, okay, now I can size up. But something that people do that always bring them back to that starting point is they'll start off small, they'll get a couple wins. Now they start drinking that Kool-Aid where they think, they're king of the mountain. They go back to their regular size or they double up, and that's the time that they take that loss, right? Where the strategy doesn't work out. No strategy, no matter who you are, is 100% right. I'm always very wary when people claim like, oh, they're always right. It's like, it's impossible. Warren Buffett wasn't always right. Carl Icahn, George Soros. I could list a number of people that are managing billions of dollars, trillions of dollars, and they're not right all the time, right? So for someone that's a smaller fish to claim that, it's like it's not doable. So I start off small, build, and then my position is according to my account size, right? So my losses at one point was like $200-300. Then it went to a couple of thousand, 30,000, 40,000, 50,000, 100,000, and some people might be like, "Oh shit, like that's a lot of money," but based on the account size that I'm trading, it's not, right? I started looking at percentage wise, and I also fell into the trap where I had someone that was like, they lost a couple $100 and they were ready to like punch a wall. And I'm looking at them like, what the hell's wrong with you? Like, it's $100. Like, relax, right? But it was very ignorant on my part because I didn't realize that that $100 was 3 or 5% of their account, 10% of their account, right? So now I started shifting people and even myself from the monetary value of it to just the percentage, because if you can make a percent a day on, let's say, $1,000 or $100, right? Over time you grow it, and 1% of $1,000 is XYZ. 1% of 10,000, it's percentage is the same across the board. The monetary value changes, yes, but the percentage is the same. I've had trades where a trader that's been around more than me, we traded FedEx. They did the shares, I did the option, I did calls. FedEx beat their earnings. My position cost me $300. In the morning, I made like $1,600-1,800, right? So I made 4x return on my money. The other trader traded the shares, made the same 1,600, but the cost of their position was like, which was like it was like 160,000, because they did like 1,000 shares of it, and they call like a point in change, and there's their 1,600. So it's like, yes, they made the same amount, but I had the better trade because I had a higher percentage return on my cost. So that's when I started looking at things like that, and that's why I liked Forex, because with Forex, trading the Dow Jones on TD Ameritrade, it's like, it was like, at the time, it was like $15,000 per one contract. But on Forex, I could trade that same position for $500 and make the same return. So if I take a position that cost me 15,000, I make 500, that's great. But if the position cost me $500 and I made the same $500, I'm making 100% return on my cost to a return ratio. Not 100% on my overall account, but on what it cost me for that position and what I yielded in return.
I see.
Yeah.
So, what's your favorite asset? If everything's all equal, what's your favorite to trade?
Before, it was the Dow Jones. It's futures. I love futures because it's Sunday to Friday. So Monday, when it rolls around, you're getting
Talking
up.
about Sunday the whole day.
No, Sunday 6 p.m.
6 p.m. Okay.
So Sunday 6 p.m. is when the futures, Eastern time is when the futures market opens. So 6 p.m. is like 3 p.m. here. That's when the futures market opens up. So I can literally start my week on that Sunday, make a couple of trades, make a couple of grand, where on Monday morning, while all equity traders are getting up, getting ready to, attack the day, I'm either adding to my day, or I'm just like, you know what, I'm good. I can sit back, or I can just trade my other accounts and stuff like that. So I love the versatility of it, and especially like if I'm abroad, where I'm either 8 hours ahead or I'm 6 hours ahead. Futures market gives me that availability where, like, okay, if I don't want to trade the New York session, I can trade the London session. I can trade the Asian session. In Dubai, I attempted to trade the London session, which was like 11 a.m. UAE time. Here, the London session was at 3 a.m., which would put us at, what, 11 a.m., 11 p.m. here, right? So it would work. The New York session is a bit like
Is it
more.
the same for Forex?
Yeah, Forex is it's 23 hours a day. 5 p.m.
Every day.
5 p.m. Sunday to 5 p.m. Friday. So today at 5 p.m., which was like what? That was 1 p.m. 1 p.m. No.
5 p.m. Eastern is 2 p.m. here.
2 p.m. So
Yeah.
2 p.m. here. That's when the futures and forex market stop. So technically, my only one full day off is Saturday.
I see.
So I trade Sunday.
Have you read or you familiar with Tom Hougaard?
I'm familiar with him.
He trades forex.
Yeah.
Yeah.
Yeah,
So
I'm familiar with him.
So he has a Telegram channel. He's taking a break now, but he calls out his trades. And I don't know if you've seen it. Maybe you can.
I haven't seen
check it out.
myself, but
But he's going to be at the conference, and hopefully you can make it to the conference on October 10th. Tickets are in the show notes.
Yes, yes. I'm definitely looking to make it to that, as long as it doesn't conflict with my Thailand trip, but which has been in the plan. So, but I want to make it, and I've even spoken to a couple of the other traders that we've met that we know as well. That wants to come and attend. So
yeah, a lot of people are going to be there. So how many countries have you been to?
I'll say probably like over 25. I would have to literally start counting to see.
Over 25.
Over 25 countries.
And which are your favorites?
Top, definitely Dubai. Dubai is definitely my favorite for aesthetic, convenience, food, connection, networking. It's really great for that. After that, I would have to say Colombia. I loved Colombia. Like, I held a event in Colombia, and I loved it so much that, like, after that event, I was literally going there like every month. Every month I was going there, and the food, it's called the Forever. Well, Medellin is called the Forever Spring city, and the people were friendly. The food was amazing. Your money goes a long way, and I was just amazed how like I could go to like a fine dining and it only cost me like $20. $40 for two people. And yeah, it's just, and I love the fitness culture there. Like every Sunday and every time they have a holiday, they shut down various roads and highways of the city, and people go running, biking. I mean, we're talking like families are outside, pregnant women with their husbands, mothers and fathers with their kids, their dogs, their grandmothers, their grandfathers, like everyone's outside. And I was like, wow, because fitness was my first passion before trading. So yeah, so that, and then I would say after Colombia, I want to say probably Amsterdam.
Amsterdam.
Yeah, I like Amsterdam.
Nice. So Rig, so how can people find you? Let's get some final thoughts. And yeah, it's been a good podcast.
So people can find me on IG, Instagram. It's Rig24, so it's RIG24. I have a YouTube, Rigonometry Trading. I also have another IG for trading, which is Rigonometry Trading. And yeah, those are my social media. I mean, if anyone ever reaches out, they have questions as far as what area they're looking into, if they're looking to get into trading, I'm more than happy to answer questions.
Yeah, well, thanks for coming on the podcast. Thanks for visiting Los Angeles and my studio over here, Friendly Bear Studio. And yeah, hopefully we'll see you at the conference. Just got to make sure it doesn't interfere with your.
Yeah, which I think it won't. So I don't think it will. So I'll definitely be pulling up with a couple of friends to support. So
awesome. Yeah, the conference is going to be featuring Tom Hougaard, myself, and several other speakers, and it is going to be a jam-packed event, and limited tickets remain, and the prices are going to keep going. Like as there's less and less tickets, it's going to go up. So make sure to lock it in. And thanks, Rig, for coming on.
Thank you, man.
Absolutely, man. And yeah, we'll catch you guys later.
Absolutely. Thank you.